Hello guys, welcome back to another video here at Pocket Broker. As you know, my name is Giorgino. I'm an expert trader here at Pocket Option, and I want to welcome you all to another video live. Now, for those of you who are new here, I want to welcome you. For those of you who already know me and you've been here before, thank you for coming here again, for joining this session. So today we are going to talk about correlations. What are correlations and why correlations can be important for us who are trading? Whether you are trading options, whether you're trading stocks, whether you're trading commodities, whether you're trading on Forex, whether you're trading short-term trading or long-term trading, you can still take advantage of correlation. First, we need to understand what is correlation, right? Well, first of all, look at it this way. Correlation, they're like two assets that move relative to each other, right? There are three different scenarios. When they move in the same direction, it's considered a positive correlation. If they move in the opposite direction, that's considered a negative correlation. If they move randomly, there is no correlation. So, of course, we're talking about it can be different kind of asset classes. It doesn't have to be always a Forex pair. So it can be Euro USD, let's say with USD JPY. It can be Euro USD with a commodity. It can be a basket of stocks like the S&P with something else. It can be a commodity even with a foreign exchange pair. Now, these can actually help us make a more sophisticated trade, whether we are going long, whether we are going short. Now, for those of you, because I know that most of you, a lot of you, they like to trade options, right? Because it's fast, it's exciting, it gives you high returns, right? But when we trade options, what is very important is that we need that confirmation. We need that confidence, whether we're going to go long, whether we're going to go short, right? And that is where correlations comes in and help us and gives us more confidence, whether we're going to go long, whether we're going to go short. Let me welcome everyone here. Bankisino, welcome, my friend. The Noble Quran, welcome to you as well. Devenivander, what's up, my man? I haven't seen you in like a year. Well, welcome back, buddy. Hope you're having a fantastic day. Hi, sir. I have lost last few months. How do I recover it? Well, my friend, I do understand that losses are also part of trading, but of course, we do not want to be in losses, right? We want to make as much profit as possible, or at least at the end of the day, make some partial profit. Some partial profit, it's still a positive scenario. And that is why, guys, I make for you these educational videos, these live actual educational videos, so you can see exactly and learn from me, learn with me, I would like to say, and see if that is something that you can also put in your own setup, in your own strategy, and help you make more profitable trades. So, going back to correlations, well, we were discussing about correlations, that we have the positive correlation, the negative correlation, and the no correlation. Now, these correlation, guys, there are ways that you can actually analyze them or study them or read them. So we have the -1 to +1. What does it mean? When you see a correlation of +1, which I'm going to explain to you and show you in just a minute when we move on to another I'm going to show you exactly where I'm going to get and where you can also get this information, study it yourself, analyze it yourself, and decide if that's going to be useful for you as well. So +1 is a perfect positive correlation, which means they move the same way every time. Both assets move the same way. So we might have Euro USD, like I said before, maybe GBP USD. And if they both move in the same direction, they're both going long, that is considered to be a perfect positive correlation. The +1 is the 100% positive correlation. Now, we have then the 0, which means no correlation at all. So no relationship, movements are just simply random. In these particular cases, it's random. We don't trade them. We avoid them because they're not giving you enough confidence of what is going on. Then we have the -1, which is technically the perfect negative correlation, which means they move in the opposite direction every time. One asset moves in the upside and the other asset moves in the downside every time. And that is the -1. Okay? Look at it this way. Let me say it differently. +1 means twins walking together, right? They're walking together in the street. 0 means two strangers walking randomly. One is going up, the other one is going down, the other one's going left, the other one, whatever. Then you have the -1, look at it as a tug of war pulling in the opposite direction. That's basically it. So correlation in general helps us predict movement based on another asset's movement. Now, let me show you, let me move on to, here we are again, the platform, but we are going to go on the platform as well. But before we move on to the platform, I would love to take you all to TradingView. Let me delete all this information just for you, because I have been studying it. I have been analyzing some charts before. So let me just remove everything. Let me also remove this for you. And let's just assume now we are looking at a stock. Let's assume it's Coca-Cola. You can actually see it on my chart, right? We are on a weekly chart. Again, it doesn't really matter because right now we're just going to show you how you can actually spot, analyze, and see correlations, and how you can actually see how strong that correlation is and if there is a correlation, right? So you're going to choose a stock, a currency pair, a commodity, whatever it is that you like to trade. In this case, I chose Coca-Cola. Now, the next thing that I'm going to do, I want to check. I'm going to click the plus over here. I'm going to add another asset. In my case, I'm going to add Pepsi, right? Why Pepsi? Because Pepsi, it's technically the competitor, let's say, to Coca-Cola, right? The biggest soda seller in the world is Coca-Cola and Pepsi, as far as I know. I'm not sure, but that's what I think. So you can see the price of Coca-Cola moving with the green and red, right? And then we can see the Pepsi as well. In a nutshell, what you can basically see is that you actually see and kind of can't help but think that they actually move kind of the same, right? Is this real? It is exactly real. But to help you to actually analyze it exactly and understand how correlated these two assets are, we come here to our indicators and we search for correlation coefficient, which is right over here. We click on it. Then in our case, we want to see the correlation between our first asset, which is Coca-Cola, and then I want to check the correlation between Pepsi, right? Now, what you see here is technically a line. It's a little bit difficult for you to understand it. So what I'm going to do, I'm going to make some adjustments just for visual purposes. In my case, I'm going to come over here. I'm going to leave my correlation. Let's keep it blue. That's fine. But instead of line, I prefer to have it as area. I'm going to show you why. The level 1, which is the positive one, let's make it green. And let's make the line like that. And then my 0 level, let's make it black. Oh, you know what? Let's make it red. Doesn't matter. Let's just make it black. And for my negative, I'm going to make it red. I'm going to make it like that. Let's just see if this will help. Yeah. Okay. All right. All right. So what do we see here, guys? First of all, you see the area, right? You see how it moves up and down. On the right side, guys, do you not see my screen? Just a second. Sorry, guys. There we go. All right. Apologies for that. All right. So here we are in TradingView. As I was saying before, we have the Coca-Cola over here. So this one with the red and green is the Coca-Cola. This blue line is the PepsiCo, and here is my correlation coefficient. Now, we can here at the bottom, we can see that there's a line in between. If you go all the way to the right, you will see it's at 0. And this line green up here represents 1, which is a full positive correlation. This red line here represents full negative correlation. This is our -1. All right. Now, if the price is sitting at the 0 or close to 0, it means that there is no correlation. If the price is rising, anything technically above 80 is considered a positive and a strong correlation, which means if the first asset moves higher or upwards, then the second asset is going to move higher as well. This is what positive correlation means. Anything above 80 is considered to be a strong correlation. Anything now on 0, there's no correlation at all. Now, if it's below the 0 and we're at -80 or anything above -80 is considered to be a negative correlation, a strong negative correlation. Now, this is very useful information because this can actually help us decide if we're going to go long or short or when. Now, let's go and explain to you that you can also use this even in Forex pairs. So step number 1, let's assume that we want to trade with Euro USD, right? Before I take any trade, I check its correlated partners. Now, how do I check correlated partners, right? Let's say you want to trade currency pairs and you want to see, you know what, I want to trade Euro USD. How do I find out correlated assets, right? This is one way to do it, but this way, it's if you know which assets are correlated. And there are a lot of different correlated assets. Historically, this is what they give us. Now, just to help you to identify easier those correlated assets, all you have to do, guys, is come to this link over here. It's one of those links that actually gives you correlated assets and inform you how strong correlation they have between them. So once we come here, let me just remove this. Here you can see also the time frames. If you're trading daily, if you're trading 4 hours, if you're trading hourly, 15 minutes, or even 5 minutes. So for those of you who want to trade short-term trades, this can be extremely useful. Now, it's important, before I get to that, let me just not say what I wanted to say. Let's just focus on this right now. So here we have a list of currency pairs on the left side and a list of currency pairs here on the top right. And in between, we have numbers. Remember what I told you? The positive correlations have to be above 80. Anything above 80 up to 100, super correlated assets. They both should be moving in the same direction. Anything below -80, all the way to the -100 is again considered a negative correlation, which means that one asset is going to have to go up, the other asset needs to be going down, and they should be strongly correlated negatively, which means that the move should be quite similar, if not the same. So, as an example, here we have the GBP USD and the Euro USD. Here it's telling us that it's 87, which means it's a strong correlated asset. So the GBP USD and the Euro USD, when they're moving upwards, they should be moving upwards together. Now, you might be asking me now, all right, well, how can I take advantage of this, right? Well, first of all, I showed you now from where you can get those informations. This is the website. I've showed you also on TradingView, if you want to do some deep analysis on the correlation and see historically how they've been performing, because historically, take a look at this, guys. Mostly the area is to the upside above 0, which is right over here, and very close to that green line, which is 100, which means that they're very positively correlated. What does this tell us? When people go out to buy Pepsi, they're also very likely to buy Coca-Cola or vice versa. For whatever reason, guys, we have a market that they're both selling at the same time. That's how I can actually say it. So, sorry, right? let me give you another example. So step number one, we locate our currency pairs that we want to trade, right? And let's assume now, like I said earlier, based on this here, it's going to be GBP USD and Euro USD, right? Once we do that, we have to check what the correlated asset is doing, right? So if your USD looks bullish, I check the GBP USD, right? Now, if GBP USD is also making a higher highs, that confirms strength. Now, if GBP USD disagrees, I skip the trade. It means the move is weak. It means that it's not enough for me confirmation or confidence for me to place a buy trade. Because if they don't both match, I skip the trade. Because what we're looking for is more confidence. Whether you're using technical indicators or triangles or support and resistance, whatever it is that you're using, and you're trading on the Euro USD, analyze also the GBP USD. Let's assume now we're going to do it here. One thing that I did not mention, very, very important. When can you trade correlations and when you cannot? If you're going to trade correlations, make sure that you're trading correlated assets in non-OTC markets, just like today. And that is why I cannot technically analyze those for you. I'm going to do it, of course, but I'm going to show you why they might not be as accurate as we want them to be, because these right now, these OTC, these are not information that we're getting from the worldwide markets. Therefore, when you're trading, when it's Saturday, Sunday, and you want to trade correlated assets, avoid trading on OTC. You can try it, of course, but based on my experience, based on what I've read, based on my research, guys, the information that you're going to get, the most accurate, let's say, information is going to be between Monday and Friday when the markets are live. That's number one. Number two, avoid trading when there are strong news coming out, because that's going to throw your correlation out on the street. They might not work. So these are very two important things to do. Now, let's assume now it was a Monday, right? I want to show you how you can actually set it up so you can actually do it yourself. There's a very nice tool here in Pocket Broker called the multi-chart. So that's going to help you tremendously if you wanted to use or trade correlated assets. And these are different strategies that you can actually take advantage from as well. Now, let's assume I'm going to put now my multi-chart here, and I'm going to analyze two different currency pairs. We did talk about the Euro USD, if I'm not mistaken. Just a second. Yeah, the Euro USD and the GBP USD, right? Euro USD is here. And let's take the GBP. There we are. All right. So now I have both assets. Remember, we are on OTC, right? So OTC is not always accurate because we've said it before, guys, these are not real now market, these are not real values coming in from the markets around the world. They will, of course, be coming in from Monday to Friday when the markets are open, just like every other broker does as well. Now, this is technically here telling me, this is technically here, and also it's important, guys, to also refresh because things change. I'm using a 5-minute analysis, so these things might change. Take a look at this. We're at 91 now. 91. That means that they're even more strongly correlated together. But let me just go to 5 minutes. No, it's the same. Sorry, we were on daily. 5 minutes is still 87. All right. Doesn't matter. So Euro USD, GBP USD is at 87. Remember, anything closer to 100 means strong positive correlation. Come back here. So technically now, if I were now to put, we're at 30 seconds, let's use 1 minute, candlestick time frame, and do the same here. All right, zooming in a little bit out. All right, so what we technically see, some similar movements, right? But not exactly, but they're very similar movements. Now, once we do analyze this, and we see, for example, you're using also technical indicators, you're using perhaps this moving average, you're using maybe the MACD to give you some more information of when is it time to buy or sell. And you know, deep down that these two are technically correlated together strongly, which means that if this is going to go higher, this should follow as well. If this is going to go lower, this should follow as well. And you can see that live on the markets even before you place that trade. So once you have your setup clean, right? Out of these two correlated assets, you need to always choose the cleaner chart, the one that gives you more confidence. You know what? We're trading at support or we're trading at resistance, and it just broke it for whatever reason. So let's assume now the Euro USD has broke a major support line and it's moving downwards, right? So it's about, or let's say it's about to break. And you see that on the GBP USD, for whatever reason, the price is declining. That gives you an extra motivation. You know what? This is declining. This is at major support. It just broke it. You're going to place your trade on this one because this is the one that gives you a cleaner chart. That support level that is about to be broken, because when a support level breaks, it keeps moving until it finds that second level of support level. Right? So if one is messy and the other one is smooth, you place your trade on the smooth currency pair. Hope that makes sense for you guys up until now. So now, if sometimes one asset moves a few seconds earlier, which actually you will find this, and this is going to be very useful for you. Let's assume now that my Euro USD just spiked to the upside, right? And this one still didn't move, right? This can give you an advantage, specifically if you're trading binary options and you're trading between 1 to 5 minute expiration time. It's kind of giving you a head start that once this spikes to the upside, this is also very likely going to move to the upside as well. And that is where you're going to place that buy trade to take advantage of that, let's say, millisecond or few seconds in advance. So this is why, guys, a lot of experienced traders, they use correlation when they're trading. Guys, I know I've been talking a lot. I hope that you're all with me. I see a lot of comments coming in. Hello, boss. Happy to be here. It's very good to see you as well, my brother. I'm new. I just start now. Welcome. Hello, boss. I'm following from Zambia. Welcome, my friend. Hope everything is well there in Zambia. Trade better, trigger. Not sure I understand that. Hi, bro. Please help me with my marriage. Guys, I don't know what's going on, but I wish you all the best, my friend. Just got to the Justice for Peace, save money. Please help me if you can, because I lost the money I had in my wallet. Guys, I don't know if you understand. I mean, with all due respect, this is no charity. This is trading. This is education. I'm passing you some information that I know, and I'm hoping that this is going to be useful for you when you're going to be trading, going to help you to make more successful trades. That is why also we have that practice account, which is completely free, that you can take advantage from. Nevertheless, as I always do, I'm going to share with you. There it is, the promo code, guys, 100% deposit bonus. If you're going to make a deposit today, tomorrow, feel free to take advantage of that 100% deposit bonus. So if you're going to deposit, let's say $100, you will get credited with another $100 bonus as well. So you can actually trade with that in your real account, of course. So this can be very beneficial, because with more money means that you can actually have more money to either recover your losses if you made some losses, or even generate more profits if your account or your trading is doing well. I always say, guys, trade wisely, trade with cautious, and always take advantage of risk management. There's plenty of videos that I've done before, guys. Feel free to watch them. What I would also be very grateful for you, if you enjoy these videos, leave a like, leave a comment down below. Let me know what you guys would like to see, and I'd love to make more videos like this. So back now to what we were discussing. So, all right, I'm going to give you another example. Sometimes one asset moves a few seconds earlier, like I said before, right? For example, gold. I don't know if a lot of you know, but gold often moves before the AUD/USD, the Australian dollar versus the US dollar. Can anybody tell me what kind of correlation does the gold have with the Australian dollar? Can anybody tell me that? I'm looking at your comments. If anybody can tell me why is the gold, the commodity gold, correlated to the Australian dollar? Does anybody know? Hello from Norway. Hello to you, my friend, as well. We are very far away. I'm all the way in Cyprus. Hello, I'm following from Uganda, East Africa. Of course, I know where Uganda is, my friend. You're also far away. Otherwise, thanks for the marvelous strategies you are showing us, my friend. It's all pleasure from my side. I hope they're useful to you. I hope that it actually also helps you with your trades. So back to my question. I asked, does anybody know if gold or how is gold correlated to the Australian dollar? This is very good knowledge. And let me tell you, Australia, guys, is one of the biggest exporters of gold. They are one of the biggest also miners of gold. So they mine gold and they export gold outside, right? So technically, for those of you who don't know, when gold spikes or dumps, the Australian dollar versus the US dollar usually has a negative correlation. Sorry. Positive correlation. So when the gold moves to the upside, the Australian dollar versus the US dollar moves upside as well, but with a lag. So usually the gold moves first, then the Australian dollar versus the US dollar moves with it, whether it's to the upside, whether it's to the downside. Because it is a safe currency for investors. Well, yep, you can also say that. Gold is considered to be a safe haven asset. So when there's no room for risk appetite anymore in the markets, investors are scared. What they basically do is that they put their money in gold. But when there's opportunities in the market, people are, gambling or investing in high risk assets, then you usually see gold move to the downside. So they're cashing in their money from their gold, putting it into something more riskier, but has higher potential for reward, right? Some very nice answers here. I see that a lot of you must have done your research because you already know about that. Because it is a safe currency for investors, because Australia is a major producer of gold, you're absolutely right, my friend. Positively correlated. That is 100% correct. So if gold breaks hard, AUD USD usually follows as well, which gives you a small timing advantage. So if you were following, let's say, gold over here, and you were trading on Pocket Broker, and you see gold spike for whatever reason, guys, head on to the AUD USD currency pair and wait for that movement so you can take advantage from it. So once you see a spike in gold, you can come here to your Pocket Broker platform, find the AUD USD and place your trade accordingly, whether it's going to go to the upside or going to go to the downside. Now, the time frames and expiries, right? So you might be asking me, all right, so what's the expiry or what is the candlestick time frame, whatever. And these are very good questions because every trader is different. Some of you like to trade short-term trades, some of you like to trade long-term trades. But if you were going to take advantage of this, what I'm actually talking about right now, you're going to have to also kind of monitor these things. So if you were on a 1 minute candlestick time frame, you should be using between 2 to 3 minute expiry time. If you were on a 2 minute candlestick time frame, you should be using a 3 to 5 minute expiry time. Now, if you were an aggressive trader, like a 30-second candlestick time frame, you should be using between 1 to 2 minutes expiry time. So we always multiply it by 2, 3, sometimes even 4 times what you're trying to analyze. So now, if negative correlation, let's talk about the negative correlation. If two assets move opposite, I check one to confirm the direction of the other. So let's assume now the Euro USD is moving to the upside, and I know that is negatively correlated with the USD and the Swiss franc. So if I check the charts and if I see this, it's a strong confirmation to buy because they're both negatively correlated. And how I'm going to do that, guys, I've shown you, you come over here and you find those correlated assets. Very important, right? So when not to use correlation, I've said that before. I avoid technically trading correlated assets on OTC during OTC, which is why I haven't done this video before for you, because I mostly trade OTC from between Saturday and Sunday. But I know that a lot of you don't just trade on weekends. You also would like to trade between Monday and Friday. And I thought that this is a great opportunity for you to learn and take advantage of it, specifically for those who are actually very serious about trading. So when not to trade correlated assets, OTC, when Saturday, Sunday, when you have strong news, because that's going to affect the movements of the correlated assets, or random sideways markets. So if one doesn't give you, one is going up and the other one's supposed to go down, and perhaps for some reason it didn't go down, you avoid it because that doesn't give you enough information, enough confidence to place that trade. We did talk about the gold, right? And the AUD USD, how they're correlated together. So in a nutshell, guys, using correlation, very important to understand, it doesn't guarantee wins, but it increases your probability because you're trading with the broader market, not against it. Remember that. You're not trading against it. If there's a trend going to the upside, right, there's a very popular saying that goes, your trend is your friend. That is why we don't technically go against the trend. And I've said it many times before. Whenever you see me trade, and whether we have a trend to the upside, right, I never put a short trade. Why? What I personally do, I wait for a pullback, then I go long again, because my trend is technically my friend. I have a strong, let's say, like I have like 3-4 bodyguards behind me, pushing me to, let's say, lift some weight. It's going to be a lot easier for me, right? And most likely that's going to move to the upside. And that is why it's important, guys, to actually follow or understand what I'm trying to say. So it also filters bad entries and gives you stronger direction confirmation. So there's a lot of things that you can actually take advantage from when you're trading correlated assets. Just a second here. Guys, if you have any questions regarding the correlated assets, let me know. I can answer them. What I wanted to do as well is to give you some information for your own self to understand some different correlated assets and why they're correlated. Like, for example, Euro USD and the GBP USD, they're technically correlated assets historically. Why? They are both risk fall together. Well, Europe and GBP, they're technically in the same continent, right? The USD, it's by itself. So basically the economies are linked. And that is why usually they're correlated assets. Australian dollar and the New Zealand dollar. For those of you who don't know, Australia and New Zealand, they're very close to each other. So economy is technically the same. And that is why they both move in the same direction, whether it's to the upside, whether it's to the downside. What else? We have the USD with the Canadian versus the USD with the Japanese yen. Both influenced by the US dollar strength and US economic data. But the Japanese yen is considered also to be more of a safe haven asset, right? Another correlated asset that I know is, for example, crude oil. Crude oil is a commodity, right? Canada is a very big exporter of crude oil. So what does that mean? If the crude oil moves to the upside, then the USD CAD moves to the downside. So they have negative correlation. Again, crude oil, WTI, if it moves to the upside or to the downside, it has a negative correlation with the USD CAD. Why? Because if the crude oil is gaining momentum, then the Canadian dollar is also gaining momentum. So CAD USD is going to be positively correlated with the crude oil, or negatively correlated the USD CAD with the crude oil. What else? I did talk about the gold with the AUD USD. They have the positive correlation. The WTI Brent with the USD CAD, they have a negative correlation. Oil goes up, Canadian strengthens. Textbook. We do have also some correlation between the S&P 500 and the USD JPY. Why? Why? Because the S&P 500 is also considered to be more of a risk asset, right? Because you have the top 500 companies in the United States, specifically tech companies, and they're more risk appetite kind of a basket of companies. And then you have the JPY, which is considered to be a positive correlation between them. The S&P 500 with gold have a negative correlation. So people who are taking their money and putting it in the S&P 500, they're confident that they're okay to lose that money because that's a high risk kind of investment considered to gold, where it's more of a hedge against inflation, safe haven asset, so on and so forth. So as I was saying before, guys, correlations in binary options. Quick rules for you to remember. You search for extra confirmation. It helps you search for extra confirmation if you were to trade with correlated assets. It avoids it's basically, it helps you avoid fake breakouts. It gives you more cleaner charts to trade when you're using two assets to analyze. And it can help you, of course, predict movements between 1 to 5 minutes if you like to trade short-term trades. We did say avoid OTC trading, avoid when there's market news. So in a nutshell, guys, the formula is as is. You pick the main pair, whether it's Euro USD, USD JPY, whatever major currency pair you're going to choose. You check correlated pairs, whether it's GBP USD or the USD with the Swiss franc. If both move in the right direction, if you see that correlation actually matching, that gives you high confidence. If opposite, you skip the trade. As simple as that. You take that trade on the cleaner chart. That's technically it, guys, about correlation. I hope it was kind of interesting, or you understood the main idea about that. Guys, as you can see, these two are supposed to have positive correlation between them. This is going to the upside. This is not even moving. But if this were the real markets, then you should have seen this move to the upside as well. What I would suggest you do, guys, whenever you get the chance between Monday and Friday, go to your demo account, go to this page right here, choose a high correlated asset, and make sure you choose the 5-minute if you're trading short-term trades. Pick a currency pair with high correlation with the other, like this one right here. Take a look at this, 91. I mean, it's as good as it gets, right? 100, it's the best thing, but 91, I'll take that every day. We have the Australian dollar with the Swiss franc, and then we have the Australian dollar with the USD. Positive correlation. If this moves up, this should definitely move up. So try to do that when you're comparing those two here and see. Important. Try to figure out which one is moving faster, and if there's another one that is actually lagging a little bit behind. Because if you find that, you take a trade on that one, because the lagging one is eventually going to catch up to the other one. All right. Australia is a major producer for gold. Who said that? Producer. Haha, I meant exporter. Oh, guys, you guys are talking to each other. Okay. Brother, I'm really under. It should be like this. Please don't ignore me. I'm sorry. I don't seem to understand your question. But what I'm going to do, my friend, for those of you who are waiting for a promo code, guys, here is that promo code, 100% deposit bonus. Make sure you take advantage of it. Also, guys, if you enjoyed this video, if you find this interesting, if you find this something that you perhaps didn't know before, if you find this or you think that this is going to even give you some more confidence into placing your trade and understanding more if your price is going to go higher or lower, I kindly would ask you to leave a like in this video. Leave a comment down below. Let me know what you guys would like to see in the future, whether it is technical indicators, whether it is more strategies, whether it is fundamental analysis, whatever it is, guys. Perhaps it's cryptocurrency, perhaps it's Forex trading. So I'm really curious to know what it is that you prefer to trade. Is it binary options? Is it stocks? Is it crypto? Is it commodities? Do you like short-term trading, long-term trading? Because that can also help me to make videos more relevant to your liking. So guys, here we are. This is the page, the mataf.net. You go to Forex tools and correlation, then you'll find this one right here where you can actually see the correlated assets. This was taken from TradingView. You can choose any currency pair and do your own research and see how correlated these assets are, whether positive, negative, or not correlated at all. Because if they're not correlated, then it won't help you when you're going to place your trade, because they're just randomly movements which are going to be completely useless. Another thing that I wanted to share with you is whenever you get the chance, or if you want to learn more or you get more knowledge, check out pocketoption.com /blog, and you'll be able to see tons of information with a lot of educational information. This one right here is specifically about correlation trading, pairs and cross asset strategies, and there's a lot of different strategies over here which you can actually take advantage from as well. Cici Elestersen, sorry if I'm not pronouncing that correct, would like to see about chart reading. Excellent. Thank you for your feedback. I do take feedback very seriously, because that's where I build up my new content, where I bring up for you guys. So once again, guys, here is the promo code. Feel free to take advantage from it. 100 deposit bonus on your next deposit. That's it for today. I hope it has been useful for you. I hope it's something that's going to help you. Of course, as usual, I'm going to see you once again next week on next Sunday. Same time, I have more content coming in, a lot more exciting things, specifically for things that you've actually been asking for as well. It was very nice to, of course, see you all here. And guys, remember, I appreciate your time here. I would also appreciate it if you leave a like, leave a comment, and let me know what you guys would like to see in the future. Thank you very much for joining once again, and I'll see you next time. Goodbye.